Monday morning, folks, and welcome to the first episode of the podcast for this year, 2025. Sunil, a very warm welcome to you. We've started this year on a good note, especially in gold. We're seeing some safe haven demand generating inside in the metal, and as a result of that, gold has gone all the way up to 2685, 2690. Do you observe and see certain reasons for why gold and even silver, for that matter, have gone past just at the start of this year?
Just going back, when we last talked, we were looking at the gold price drifting down. You talked about it and said that you felt it was going to drift down, and which it did. And it seemed to be just hovering above 2,600. But in the last few days, we've seen an uptick. And I think there are three primary reasons for that. Predominantly, it's driven by the fact that the data in the US shows that the Fed is probably not going to cut as many times as people expected. In fact, now the market in general expects one cut, and most people earlier were like last month were looking at three cuts. So the fact that we're coming maybe to the bottom of the rate cutting cycle has meant that the inflation fears have come up again and gold has jumped up again. So that's one reason. The second, I think, is continued flows of private investors into gold. There's a lot of talk about investors looking at different forms of bonds to try to buy gold, buying gold equities. So generally, there is a bullish trend amongst the investor community. And the third reason is just the uncertainty. You mentioned safe haven. We've got a big event coming up. Trump's inauguration, and he's made a lot of promises about things he will do on the first day he goes into office. And so I think there's a lot of uncertainty around tariffs, around immigration policy, around fiscal policy. And so people have basically taken some money out of the equity markets and are parking the money in gold right now.
So maybe just for clarification, the relationship between interest rates, inflation, and gold currently, could you clarify on that as well? Because sometimes if inflation is going up, interest rates may be kept higher by the Fed to keep a curb on inflation. And as a result of interest rates being higher, then gold would be negatively impacted. But sometimes we see that this relation is not normally followed as well, especially currently.
Yeah,
So could you clarify that as well?
Yeah, I think what we were seeing last year was a sort of inverse relationship in the sense that if interest rates were higher, gold was coming off, and there was a view that it'll substitute bonds or interest yielding assets are better than gold, so people will sell gold and buy interest rate assets. I think right now the market has been quite caught surprised by inflation, and there's an uncertainty about inflation, and that's what's driving the expectation that inflation may not come down to 2 or 3%, may suddenly spike up again. So that uncertainty is what's driven this gold move right now in terms of inflation interest rates.
Thanks, Sunil, for clarifying that. Let's quickly look into the technicals and see what the markets have in store for us. So here we have the spot gold daily chart. Firstly, I think from October itself, we've been seeing this sort of a consolidation pattern where the metal has created some new lows, and from the new lows, it has been trying to rise back up to these highs of all-time highs of 2790 that we had hit. Now, as of last week, we saw 4 consecutive days of just bullishness, so much so that the metal has managed to break out of this symmetrical triangle pattern that you see over here. Moreover, if you look at these red, orange, and teal lines over here, these blue lines, these are all the 20, 50, and 100 EMAs. All of them are pointing upwards in the positive direction, and you have your price action well above these lines as well. The presence of both of them, coincidentally, is a strong indicator of bullish momentum to continue. You also see that your RSIs on the daily chart are slightly below 60, but they're entering into that 60 to 70 zone, showing that there is more room to the upside. So from a positioning standpoint, what I would say is if the metal is currently at 2689, we have to wait for a breakout above 2700, which is somewhere around this area. And we have to possibly look for a test of 2731. This is the area where the metal has not been able to break over 2 prior occurrences. It has seen a reversal right after this. So 2731 is going to be the next immediate resistance for the metal, where the metal is likely going to hit if 2731 is not going to break, we're going to see the metal retreat back to this 2662 level eventually. This seems like the possible trajectory given the bullishness that's currently present in the metal due to the safe haven demand, due to geopolitics. I also like to mention about some of the key economic indicators of this week. We have producer price inflation, and more importantly, we have CPI, or the core inflation rate, releasing on Wednesday. In addition to that, we also have retail sales that's releasing on Thursday. I think the inflation question that you've posed in this just earlier, stating we don't know whether inflation is stagnant or it's increasing back again, this reading on Wednesday is going to give us some answer regarding that. Lastly, Sunil, just to reiterate, resistances stand at 2730 and 2790 in the long term. And on the downside, we have supports all the way down up to 2595 and 2532. So between, I think, 2700 to 2600, there's this $100 range where you're going to see the metal continuously drift. And you can freely take positions in this $100 range. But to take something for a long term, you'll have to wait for either the 2730 to be broken or the 2595 to be broken decisively. So that's a quick roundup of the gold outlook, Sunil. Let's look at how the markets play out this week. But till then, thank you so much and goodbye.